Hello, Maverick traders, and welcome out to your daily currency recap. This is Ankit here, and let's break down today's market price action. It's Wednesday, December the 11th. Let's get into it. As always, we'll be taking a look at broader market analysis, take a look at what moved the markets, what the news telling us, what the currency basket is telling us, and then we'll take a look at some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So as we jump into the market analysis, let's just jump right into the news of the day. And again, we had a busy day as far as the news event goes. So at first, we had the US CPI, which again came in line with expectations. So no surprises there. And you can see the price action in the US dollar and the yields, they're kind of muted. So again, the data that came out today was nothing that will rock the boat. So that's why every time we see a data that comes in line with expectation, we get the least amount of reaction out of it. So that's really where we are in those two areas. Now, we take a look at Bank of Canada. They cut rates by 50 basis points, a jumbo rate cut. But as we discussed yesterday, the important thing was what they're going to say as far as their future outlook goes. So they did signal more gradual pace, meaning they wanted to do this big cut and kind of slow down after that, and kind of wait and see approach. So that's less dovish as you would expect a central bank to be. So I think that was a bit of a change in the Canadian dollar. We'll take a look at it in the Canadian dollar basket. But outside of that, if you just take a look at the movements today, CAD actually was the best currency. So again, this is where you look at, wow, they just did a rate cut. Then why the CAD is up. Remember, a lot of times things get priced in going into news. So a lot of that bearishness on their big rate cut was already priced in. Everybody knew about it already. So the more focus right now is not on those rate cuts, but their future outlook. And that's something we're going to focus on all central banks, not just the Canada, but we have the ECB and its SNB tomorrow. Again, that's the thing we'll be focusing on, is not just the headline, but their future outlook. So if you take a look at outside of the Canada, we have the USD continues to be strong, and we have the yen dip down a little bit. Again, percentage-wise, not a great trading day. And again, on a day like today where you expect more volatility, I'm just not really seeing things moving up higher or even lower. I think things kind of stuck within this little range here. Look at the Aussie only up 0.09 and Kiwi 0.06. So not a big changing day. Again, days like this, you want to be in the cash when you're not really seeing a big movement percentage-wise. Now, if you take a look at the other markets, there was definitely more movements. S&P did rise after the news, and again, now back to the all-time highs once again. We have the World Stock Index doing the same thing. Crypto had a nice rally, but remember, crypto kind of hit a rough patch in the last few days as well. So seeing a bit of a recovery there. Gold was up, oil was up very nicely, 2.77%. So you can see everything was up kind of across the board as far as the market sentiment goes. Now, here we are with the cryptos. You can see everything kind of went up. Bitcoin went up like 5%. Bitcoin Cash, Ethereum, and Litecoin. So pretty much a nice rally across the board in the crypto market. So I expect crypto markets to kind of do the same thing until we transition into the new years. Remember, a lot of money got put in towards the before the year end, and I think that's really what you got to focus on, is where the money's going. But that necessarily doesn't have to always transition as we go into the new year. And that's why, if you're looking for big moves to happen, I think the best thing to do is look for that transition into the new years. But maybe the next 2-3 weeks, we'll probably see a lot of back and forth. And again, I'll take a look at the charts and see, some of the currency baskets are showing us a back and forth. Now, here we are. As far as the equity market goes, again, nothing really to rock the boat. It's a +3. And as you take a look at the chart here, you can see that pullbacks just get bought out. We run a little bit, we did pull back, and we are now, looks like it wants to break out once again. So again, market already had a stellar year, but again, same thing. Nobody's selling because everybody's just wanted to close out the year and then look forward to the next year. So I think that's really where we are. We see this every year. So if you're new to this, that's the kind of price action we get towards the year end. Now, here we are with the news events. And again, we started off with the RBA. You can see there was no change, but the outlook was dovish. We had the Bank of Canada. They cut, but the outlook was less dovish. So something to keep an eye on. The US API, you can see that it was all in line with expectation. No surprise. So that's why no change, no big change in the USD here. Now, tonight we have the Aussie employment report. Remember, employment reports are important right now. So, keep an eye on this one, especially after the, RBA, they did sort of hinted a little bit more dovish. Again, if this unemployment report comes out bad, I think that will accelerate some of that downside in the Australian dollar. But again, if that comes out better than expected, I would see the Aussie sort of back off and go higher a little bit on that news. But outside of that, again, the big real focus here is on the S&P. Look at that, 1% to down. They're looking for a 25 basis cut, and same thing with the ECB. But the most important thing we're going to look for is in their assessment, in their statement. Are they more dovish? Are they saying that there's more rates cut coming? And again, those outlook is going to really set the tone for some of these currencies. And as we go into tomorrow, we have the PPI number as well. So remember, unemployment claims, PPI, another piece of inflation data. So again, if it comes out in line with expectation, don't expect much. If it comes out below or above expectation, that's really where we see a bigger move. So, the next 24 hours looks interesting and not a whole lot on Friday. So I think in the next 24 hours is really where the most of the movement is going to happen. Now, let's just jump into our currency analysis and then just jump right into the velocity scores. So this is where the velocity scores are. You're seeing the Aussie, the Kiwi, and the Euro and the Yen on the weaker side. You're seeing the CAD and the dollar kind of doing the same now, +2. We have the Aussie and the Swiss franc crown in the middle, and then pound is a +1. That's really where we are. So let's just jump right in. Let's just jump right into the analysis here, and then take a look at some possible steps ahead.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So first thing I want to point out is this USD currency basket, because I feel like the USD, this is a daily chart. You can go on a 4-hour chart. You can see that the dollar really hasn't gone anywhere for the last, a month. You can say that this is where we were December the 13th. This is where we are. November the 13th to December the 11th. We really haven't gone anywhere. And if you look at the daily chart, you can see that this is a strong level of resistance. That's really where we are pausing. We paused here, and here we are pausing again. So at this point, I don't really love to get long here until I really have a good confirmation. But if you can see the way we ended the day today, we ended with another wick. So this is, again, traditionally would say, hey, that's a bearish sign. It's failing to break out. Maybe we'll look for another possible setup to the downside. The problem is that it's not really falling apart either. This is a 4-hour chart. You can see that it's just hovering right around that level. So dollar is just a tough short. But at the same time, it's not a favorable long because it's just up against that pretty resistance level. So let's just put the dollar on the shelf here because, like I said, if it gives me a confirmation on breakout, which means, we get a full body candle and a continuity to it, that will be the confirmation. But right now, this is not the confirmation where we're getting wicks. And it did close below than the resistance level. Now, let's see where else we can find opportunity. Well, Japanese yen, you can see that this thing had a nice run for 3 weeks, and the momentum seems to be slowly flipping here. This is a daily chart. This is the 4-hour chart. It looks like if the dollar sort of take a back seat, we can see the maybe yen sort of underperform here. This is the daily chart. You can see we can still pull back a little bit. It's just hanging off right on the exponential moving average here. So slightly bearish outlook on the yen. Now let's just talk about Swiss franc, and you can see this thing also failed to break out. So this is a level of resistance. Look at the wicks that we're getting around this level here. This is not the candlestick you want to see or you want to trade, because it's just telling you indecision. It's not really moving higher. It's not really moving lower. So again, not a trade to be had over there. Now we can go into the euro. Well, euro is consolidating as well, but same thing, consolidation, right? This is the environment where, you know, it's a tough long, it's a tough short. Pyramiding doesn't work. This is the environment that you want to avoid. Now the pound was doing well, and you can see that now it's just kind of consolidating here. So consolidations are a great time to get long. Let's take a look at the daily chart. And the daily chart, you can see that this thing is up against a pretty good resistance here. So I always say, watch out for these resistance level. And that's where we see sometimes flips happen. So even though as much as I like the price action on a 4-hour chart, the daily chart, I'm not really getting a confirmation. So I'll be a little hesitant here and looking for a confirmation. Now, let's see CAD. Can we see CAD sort of resume the uptrend here? Well, the daily chart, you can see that it got above this exponential moving average. We didn't close on the highs of the day, but on the 4-hour chart, you can see that we are right back at the resistance. So, you know, it's too early to make a call on the CAD, but if I have to really take a shot at it, I'd rather take a shot on the upside than I do to the downside. So a best pattern would be that if you just pull back a little bit of base and then moves higher. So potentially I'm looking for CAD, you know, more to the sideways to the upside. I think that's really where I will be focusing on the CAD here. You know, with this shift that we're noticing, you know, we could see that translate into some higher price action. Now the Aussie, you can see that this thing is testing support right here. It is still clearly in a downtrend, but it's no longer, you know, breaking new lows. So we got a support in place. So you got to watch out for that. We had the Aussie point report tonight, so we can easily sort of, you know, dip below that, or we can easily get a rise above that on that news. So we still, this, you know, I can totally see the Aussie turning a little bit range bound. Remember, this has been more directional. I won't be surprised if it becomes a little range bound here, which again trades back and forth in that range. And now, if we look at the comparison between the Aussie and Kiwi, Kiwi is clearly a relatively weaker currency, but this thing is still showing more relative weakness. But then if you go on the daily chart, you can see that it's just up against a pretty important level of support right here. You can see that we have bounced a few times at this level. So that's why, again, if you go on these daily charts, you'll notice that a lot of things are stalling right at these key resistance support level. The tricky part is that if you go on a 4-hour chart, I'm not really seeing a big reversal either. We're just hanging around that level. So I think that's why it's a little bit difficult call here to see, you know, where things going to go. I don't want to jump on a reversal because I don't have a signal yet. I don't want to jump on a breakout because I don't have a signal yet. So the only thing, you know, we can start looking at is, okay, what's the relative strength of weakness telling us? Dollar CAD. Remember dollar and the CAD? Dollar has been the outperformer, and take a look at where dollar CAD is. It's at the highest level that we have seen. Let's go back in time. This is the highest level we've seen, you know, back in 2020, and then back in 2015, 2016. The thing is that 2020 was, you know, we all know it was a pandemic. But before that, in 2015, you know, that's where we saw a massive move in the CAD to the downside. But this time around, it's not really about CAD weakness. It's more about the dollar strength. And I think that's what was the highlight in the statement from Bank of Canada governor, that, hey, Canadian dollar is not the weakest if you look at among its other counterparts. But that, if you take a look at it against the dollar, it kind of sends you an alarming signal that, hey, it's at these levels that we haven't seen for a long, long period of time. So the question is that, can we see CAD sort of outperform the USD for a short term? Well, you can see that on a 4-hour chart is still hanging around that. You can see there was a bit of an indecision today. We got a massive candle on dollar CAD, and we kind of closed right in the middle here. I think it's a 50-50 call. But again, if I have to take a chance on this one, I would expect that maybe dollar stall a little bit, and then maybe CAD sort of pick up a little bit. So in that case, maybe we'll start taking a look at some CAD crosses. Now, going into the euro and Swiss franc, like I said, it's just a rolling the dice here. Based on their statement, you know, if we move directionally one way or the other, that's what I want to jump on. But right now, we got a resistance in place. We got a support in place. So draw those levels, set some alerts. If you start to break a certain level, then they will be more worthwhile to enter. But right now, at this point, it's neither look like a good long or a good short to me. So really comes down to, can we look at opportunities between that relative strength weakness? Kiwi CAD. Can we see an opportunity in Kiwi CAD? You can see that just a bit of a messy chart here. We got our resistance right about 82.10. It's right here. Maybe some consolidation here. Can we see an opportunity on Aussie CAD? So what I would like to do is, instead of the dollar, I'm taking a look at some of the CAD crosses and see if there is any movement that I can find on CAD crosses here. But you can see that they're not the best technical looking pattern, CAD against the Swiss franc. Perhaps we can take a look at that one if the Swiss franc breaks. But you can see that this setup is just right at the support here. So if you want to trade the range, then we got the range. You're at the bottom of the range. Start to rise up again. The RSI is picking up again. And we set our stop right below that support. We can also see if EuroCAD's going to weak, if there's an opportunity there. But you can see that this thing is not the greatest looking chart either if you're looking for CAD to strengthen, Euro to weaken. So again, this all comes down to those news trades. That's what I would like. Look at this hourly chart. We had a nice break and a rally here. I would love to see that rally fail. So, these are the times where you want to shorten your time horizon to, how long want I hold that position for? I think there are opportunities to be had, but they'll last you for a few hours to maybe a day. We're not really getting a move that would last you for multiple days. So I think that's where daily traders, if you're trading on the daily chart, then this is again time to kind of step back. But where, if your time frame is smaller, you just want to capture that volatility, whichever way it goes, you can have a decent opportunity there. But again, right now, I think that's really where we are. Unfortunately, not a greatest price action that you can find. So in conclusion, we are looking at ECB and SNB rate statement. That's going to be in focus. One thing, very important. Secondly, we're going to take a look at CAD and see if there's further advances in CAD. So pay attention to the dollar CAD, especially if the CAD start to outperform the dollar, then that maybe there's a rotation coming in. But right now, when we look at the charts, it's still too early to make that call. And then we have the RBA, the Aussie employment report. So if you're looking at, Aussie to move, I think then that will be the one to pay attention to as well. So again, be careful in these markets. Trade only when things are, lining up based on, the environment. The strategy is going to do well based on that market environment. So as the market environment change, certain strategy becomes more favorable, certain strategy become less favorable. That's just the way how trading works. So make sure you're adjusting to those market conditions. Thanks for joining here. We'll see you in the next update. Happy trading.